you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions. Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall, and here with me today is Lee Freeman-Shor, manager of the Old Mutual Global Best Ideas Fund. Hello, Lee.
Good morning.
So I thought we'd start with the US because we've had quite a big correction in the US. It's sort of lost all the gains that it made so far this year, although this year is only 2 and a bit months old, so perhaps not the end of the world. Is this the beginning of the end for the US stock market, do you think?
Yeah, it's a good question. I mean, I think if you look at the US, it's had a fantastic run over the last 3 years in particular, significantly outperforming most markets globally. The US dollar's also had a tailwind. But one thing that is a pretty obvious observation is that the US, every time it's had QE, during the 3 QE programs it's had, the market has rallied. And when QE has ended, the market's sort of like done not much as the market participants try to digest what the future holds. And I think, looking at the US now, one thing is very clear: the market is expensive relative to other markets. It's traveled a long way. And it doesn't surprise me that money is beginning to flow into other areas like Europe and emerging markets, which on the face of it look far more attractive.
Let's flip it then and talk about where that money is going. Europe has had significant headlines over the last year. Do you think that enough has been done to sort of stabilise those economies and indeed boost those stock markets?
I think the very positive thing for Europe is that you've got Mario Draghi at the helm, an Italian, who back in 2012 said he'd do whatever it takes. And finally, this week, he has started QE. And going back to the US, which we talked earlier, one thing we know is wherever QE has been done, it's led to asset price inflation. So the US stock market's done well, the UK stock market's done well. So this bodes very well, I think, for the European stock markets. In terms of the economy, I mean, that's a slightly different sort of question. I mean, obviously there are some headwinds. I mean, we know that credit channels are broken, banks aren't lending. That's an issue, and needs to be dealt with in the longer term. Reforms have to take place in France, in Italy, in the longer term, if Europe isn't going to end up like Japan, which is the fear, and which is why German bonds are trading at less than 30 basis points and lower than Japan. So, longer term, there's still question marks. Shorter term, the QE has put a putt under the market. Markets are up over 15% in Europe this year, and it looks very well. I mean, Europe's an exporting economy. A cheaper euro is good for European business as a whole. We've had oil prices obviously coming down significantly over the last year. That'll put more money into the consumers' pockets, which should help the European economy as well. So I think Europe, there's lots of positive things happening in the near term. Longer term, some headwinds, structural reforms need taking place. In the short term, there are still headwinds as well, which could knock at least sentiment temporarily, such as Greece or Ukraine or elections in the UK and Spain. But I think, looking globally, where would you invest right now? Europe looks very attractive with QE happening, which should underwrite markets. And if history does rhyme, then Europe looks pretty attractive.
Lee, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.